Tom Piotrowski joining us live. Tom, how are we going to open up today?
Pete, we're going to see a slight step back this morning. The futures are telling us that the ASX 200 should be down by around 0.25% when we kick off later on this morning. That's a reflection of what we saw on Wall Street mainly, although Northern Hemisphere stocks broadly were a little bit lower last night. The counterintuitive aspect to that, Pete, is that for the second night in succession, we've seen some better than expected readings when it came to US inflation. Yesterday, it was consumer inflation that came in below expectations. This session, it was producer inflation that was better than expected. It was the first fall that we had seen in around 2 years. And there was a small rise expected in the headline rate in monthly terms. It actually fell by 0.5%. The headline rate in annualized terms fell from 11.3% to 9.8%. So still elevated, but that inflection point or that move lower over the course of the last month certainly a welcome outcome when you dovetail it with yesterday's numbers. So the counterintuitive part of that is that stocks moderated and actually interest rates went up a little bit. So the S&P 500 was down by around 0.1%. The Nasdaq was down by around 0.5%. But you'd put that into the context of the rally that has featured over the course of the last month and a bit, Pete. From the middle part of June, the Nasdaq has rallied as much as 23%. And the S&P 500 up by around 17%. The local market's up 10% in that same time. So given we've got the latest inflation numbers out of the way, it's just a question now of consolidating and reflecting on where we've come from. So it's a reasonable response that you could see from the share market today if you wanted to justify it in those terms.
Okay, Tom Piotrowski, thank you.